Welcome to your training in respect of the corporate criminal offence and how it applies to you and the business of the Swansway Group. This training is intended for all associated persons of the Swansway Group as defined by the corporate criminal offence, and it will enable you as an associated person to understand the seriousness of the provision and the importance of your actions. This training is intended for the employees and other associated persons of the Swansway Group and is focused on the statutory provision known as the corporate criminal offence. We will refer to the Swansway Group as the employer for the purpose of this training, and that should be suitably interpreted where the relationship between Swansway Group and the associated person is not that of employer and employee. The training will help you as an associated person to understand what the legislation is, how it applies to your employer, its relevance to you and your role, and the consequences in the event your employer was found to be in breach of the provision. The training will also briefly explain what is meant by tax evasion, as the prevention of the facilitation of third-party tax evasion is at the heart of the legislation. We'll discuss the parties that you may interact with on a daily basis and how the tax affairs of those parties may impact on you and your employer. We'll also define an associated person and focus on how the actions of associated persons relate to the corporate criminal offence and the potential criminal consequences. It's important then to offer some context as to how a third party may look to commit tax evasion in the context of your employer's business. And it's equally important that the role you could play in facilitating that evasion is also understood. And finally, we'll touch upon the actions taken by your employer to protect themselves from facing a criminal charge. The corporate criminal offence, or CCO as we will refer to it from here on in, was introduced with effect from the 30th of September 2017 and holds relevant entities to criminal account where an associated person of that entity has facilitated a third party's tax evasion. And by relevant entities, we mean incorporated bodies or partnerships. Put simply, if a customer or supplier commits tax evasion and an employee of the relevant entity helps them to do so, that relevant entity may face a criminal prosecution. Now, the tax evasion does not necessarily need to occur in the UK. A UK corporate body or partnership may face a criminal charge in the event tax is evaded outside of the UK. And to the extent tax is evaded in the UK, the CCO applies to any head of tax, both direct and indirect, which is within HMRC's jurisdiction. The CCO attracts strict liability, which means it's not necessary for the relevant entity to be aware of the evasion and facilitation. If tax evasion occurs, and that is facilitated by an associated person, the entity will have committed a criminal offence, subject to one specific statutory protection, which we will cover shortly. The CCO is one manifestation of HMRC's wish to shift the perspective of the UK tax-paying public. They consider it fundamentally important that tax evasion is culturally unacceptable, and the expectation is that companies, LLPs and partnerships will drive that change. In the event an entity does not do so and neglects its obligations under CCO, HMRC has the power to criminally prosecute if facilitation occurs. In the event a relevant entity is found guilty of a breach of the CCO, it could face a criminal conviction, unlimited fine, and also enforcement action from any relevant regulated body. And hand in hand with the formal consequence is the obvious reputational damage associated with the inevitable negative publicity. It's very important that as an employee, you have an understanding of the implications of the corporate criminal offence and how your actions may impact on your employer. Essentially, it's the actions of associated persons that will determine whether your employer faces a criminal charge. If you choose to assist another party to commit tax evasion, whether that's through the settlement of an invoice in cash, incorrectly stating the nature or quantum of a transaction on an invoice, or indeed something more complex or convoluted, you will be facilitating tax evasion, and that may result in a criminal charge for your employer. It's worth now reflecting on the various criminal acting points and understanding who is held accountable for them. Firstly, we have the criminal act of tax evasion. This is the criminal act committed by the third party, that may be a customer or supplier, and is the result of that party deliberately failing to pay the right amount of tax. We will consider in more detail what constitutes tax evasion shortly, but it's worth noting that the criminal responsibility for tax evasion has not shifted following the implementation of the CTO. The second criminal act is that of facilitation. This is the act which serves to assist a third party in committing tax evasion. The facilitator remains criminally liable for their actions. So in the event you choose to assist a third party in failing to pay the right amount of tax, you may personally face criminal prosecution. And then we come to the third offence, the failure to prevent the facilitation of tax evasion. This is the new criminal offence introduced by the CTO and holds the relevant body criminally liable as a result of the facilitator's action and the third party's tax evasion. So in the event the first and second criminal offence have occurred, the relevant entity will have committed the third strict liability offence. That is, unless they have implemented reasonable prevention procedures. And we'll go on to explore the implementation of reasonable prevention procedures shortly. As you now know, an exposure to a criminal charge under the CCO is predicated on the occurrence of tax evasion and the facilitation of that evasion. It's important, therefore, that you are clear as to what constitutes tax evasion and how that can be facilitated. The evasion of tax is the result of cheating the public revenue or being knowingly concerned in the evasion of tax. The facilitation of tax evasion involves being knowingly concerned in another person's tax evasion or aiding and abetting the evasion of UK tax. What is consistent throughout both of the definitions is that it requires the party concerned to know what they are doing. Essentially, if you are to facilitate tax evasion, you will do so deliberately. It's not something you can do unwittingly. Although we do not go into this in any more detail as part of this training, it is important to remember that a criminal charge can arise with regards to the facilitation of non-UK tax evasion. A foreign tax evasion offence consists of a breach of duty relating to tax in a foreign country that would be regarded in the UK as the evasion of tax if the same offence took place here. If the relevant body is incorporated in the UK or incorporated overseas but carries on a business in the UK, or the relevant body's associated person is located in the UK at the time of the criminal act, the foreign tax evasion can be committed. It is highly likely that your employer will be vulnerable to the foreign tax evasion offence, and as such, when considering how you and your role may lead to the facilitation of tax evasion, it is important to be equally conscious of your interactions with third parties outside of the UK. An exposure to a criminal charge under the CCO arises in the event that an associated person of the relevant entity facilitates the tax evasion of a third party. The third party may be a company, partnership, individual, or indeed any other person or entity which has an exposure to tax. With regards to the UK tax offence, the evasion of tax by the third party could be in respect of any head of tax under HMRC's jurisdiction. These include the obvious liabilities such as corporation tax, income tax, VAT and pay-as-you-earn, but also include some less well-known charges such as landfill tax, as well as tobacco and alcohol duties. Whilst you and your employer have no control over what third parties include or exclude from a tax return. You may be asked to facilitate or assist that third party in manipulating the returns it submits. It's important, therefore, that you understand the third-party relationships that you may have, which could leave you open to the facilitation of tax evasion, and therefore your employer vulnerable to criminal prosecution. As broad as the net is for determining which entities are subject to the CCO, the population of third parties that could commit tax evasion is arguably wider, with the inclusion of tax-paying individuals and other non-corporate entities. To the extent that your role within the business requires you to interact with third parties that have an obligation to notify HMRC of an exposure to tax, that third party could commit tax evasion and could use you to facilitate that evasion. In the case of a supplier, whether that's with regards to goods or services, it is likely that your interaction will result in a receipt of income by that party, with a resultant potential exposure to direct and indirect tax. Your interaction with that party could lead to the understatement of that income, or the understatement of the indirect tax received in respect of that income. In the case of a customer, it's likely your interaction will result in an expense for that party, which may or may not be deductible for tax purposes. Your interaction with that party could lead to the overstatement of that expense, or the overstatement of the indirect tax paid in respect of that expense. As you'll see later, the way in which these simple outcomes, the understatement of income or overstatement of expenditure, can be very straightforward, or it can be increasingly complex and convoluted. You may be able to identify circumstances in which your interactions with a tax-paying third party is unlikely to have the potential to impact on that party's tax liability. For example, the sale of a product or service to an individual in their personal capacity rather than a business capacity is unlikely to feature in any tax submissions to HMRC. However, the individual could manipulate the nature of the transaction such that it does have a tax consequence for another entity or in another context. Whilst it would be prudent to assume that a tax consequence for a third party may arise from all relationships, we come back to the fact that an exposure to a criminal charge can only arise if an associated person facilitates tax evasion. Tax evasion can only be facilitated knowingly, so as an associated person, it will take willful action on your part to facilitate the third party's evasion. It cannot happen in error. So we now know that a potential exposure to a criminal charge under the CCO arises as a result of an independent third party committing tax evasion. However, the direct link to a relevant entity is the facilitation of the third party's tax evasion by an associated person, and the causal effect of such facilitation can be a criminal charge for the entity. So how do we identify who is an associated person? As you've been assigned to this training, it's likely you are an associated person for the Swansway group, but you should understand why and also be able to identify other associated persons of the group. The statutory definition of an associated person includes all employees. That is essentially any person operating under a contract of service for the group. It further provides for persons acting for or on behalf of the group to be associated persons. This specifically includes agents, but could also include consultants, suppliers, advisors, and all other forms of representatives. The key point is that the service is being provided for or on behalf of the group, rather than to the group, and we'll run through an example to highlight the difference in a moment. If you are in any doubt as to who is and who is not an associated person, a detailed list of associated persons is maintained by the group. What is fundamentally important is that the associated person can only leave the relevant entity exposed to a criminal charge if they facilitate tax fraud in their capacity as an associated person. If they do so in a personal capacity, by paying a workman in cash for uninvoiced work at their residential address, for example, they would not be acting in their capacity as an associated person, and the entity would not be exposed. If we now take an example to put into context an associated person's relationship with the group and which actions may expose the group to the CCO. So in this example, we have a logistics firm which has responsibility for delivering a fleet of new vehicles from the manufacturer to a specific dealership. The manufacturer engages and instructs the logistics firm to deliver the vehicles to the dealership. The logistics firm is not providing services for or on behalf of the group. It may be providing services to the group, being the delivery of a fleet of vehicles, but it has been engaged by the manufacturer. It may be acting on the manufacturer's behalf, or it may be acting independently of either the manufacturer or the dealership. The dealership then sells vehicles to individual customers and agrees to deliver those vehicles to the customer's residential addresses. The dealership engaged with the same logistics company to deliver the vehicles on their behalf. In this instance, the individual customers understands they are transacting with the group and that the dealership will be delivering the vehicles to them. It's likely that the logistics company will be providing services for or on behalf of the group, as they'll be representing them in delivering vehicles to the customer. In delivering vehicles to the customers, the logistics company is acting in the capacity of an associated person of the group. Any actions taken at this time by the logistics company to facilitate a third party's tax evasion could expose the group to a criminal charge. Moving on from the example of an associated person, we now look at how the associated persons may be used to facilitate the tax evasion of a third party. There are many ways in which tax could be evaded, some complex, others straightforward and obvious. The evasion could occur in the supply chain or it could occur in the customer base. What's important to note is that the associated person will always be aware that the actions they take will lead to the evasion of tax. So if we look now at our first example, we have a sales agent who is looking to secure a sale at a key time in the quarter, and they have identified a potential corporate customer. The customer is looking for a discount that the employee is struggling to match, but with a focus on securing the sale, the employee looks for creative ways to satisfy the customer's needs. It's agreed that the sale will be invoiced at the full price, with a discount being afforded by way of a credit note, whether that's immediately or at a later date. That credit note is then deposited into a different party's bank account, and it's clear that the gross amount will be accounted for tax purposes by the client. So the sales agent knows that the rebate will not be included in the accounts and has knowingly facilitated tax evasion. Although unaware of the arrangement, the group has committed the criminal act of failing to prevent the facilitation of tax evasion, unless reasonable prevention procedures have been implemented. Our second example looks at a scenario in which the evasion of indirect tax is in point. A key client of the group is looking to rationalise its business and reduce costs wherever possible, including in its transactions with the group. The client is VAT registered, and many of its dealings with the group are zero rated, meaning that no VAT is due on that transaction. Although the client asks for a discount, given the scale of its business with the group, a discount cannot be agreed. In order to retain this important client, an employee looks for ways to reduce the overall cost. The employee identifies that they can manipulate the client's invoices such that the client's copies include the standard rate of VAT. This enables the client to secure a significant rebate of the costs incurred direct from HMRC. The employee has knowingly facilitated tax evasion, which is a criminal offence. Although unaware of the arrangement, the group has committed the criminal act of failing to prevent the facilitation of tax evasion unless reasonable prevention procedures have been implemented. Our final example takes a look at an instance of tax evasion occurring in the supply chain. Here we have a supplier having worked with the group for a number of years, and the group's finance department are familiar with the business, the payments that are regularly made, and where those payments are deposited. It's identified on the most recent invoice that the supplier has requested for the settlement to be made to a bank account outside of the UK. As is typical, the finance department calls the supplier to confirm that the amendment to the payment details is correct. The supplier confirms that to be the case and goes on to explain that they are having short-term cash flow issues, and the payment to an offshore bank account will allow them to benefit in the short term from not having to pay over the VAT on their invoices. As they've confirmed the amendment is genuine, the finance department authorises the payment, notwithstanding the understanding that it will lead to the evasion of tax. The employee in the finance department has knowingly facilitated tax evasion, which is of itself a criminal offence. Although unaware of the arrangement, the group has committed the criminal act of failing to prevent the facilitation of tax evasion unless reasonable prevention procedures have been implemented. Each of the previous examples have concluded with the reflection that the group will be protected in the event the facilitation of tax evasion occurs only if it can be demonstrated that reasonable prevention procedures have been implemented. Here we'll summarise the steps taken by the group to implement the necessary procedures. The group has undertaken a thorough risk assessment of its business, including a review of its customer and supplier base, its associated persons, and the specific risks identified by HMRC and how they translate to the operation of the group. To the extent the risk assessment has identified areas of potential exposure to third-party tax evasion, the group will be implementing proportional risk-based procedures which will serve to mitigate that risk. The group has implemented a CCO policy document which will be made available to all associated persons and other relevant persons. The policy document sets out the group's view with regards to third-party tax evasion and serves to reflect the culture of the group. The group is committed to ensuring that all associated persons are aware of the impact of the CCO on them and the group, and this training is a key part of the communication process which serves to raise awareness and understanding of the relevant obligations. Finally, the group recognises that taking steps to implement reasonable prevention procedures is not a one-time exercise. The group will be regularly monitoring its operations on both a time and an event-driven basis, with a view to identifying any new or developed areas of risk. To conclude this training, we summarise the key points that all associated persons should remain conscious of with regards to the CCO and the associated obligations. Any exposure to the CCO originates from the facilitation of third-party tax evasion. If an associated person facilitates third-party tax evasion, they may personally face criminal prosecution for their actions. The employer may face criminal prosecution and the associated financial consequences and reputational damage in the event an associated person chooses to facilitate third-party tax evasion. Only the implementation of reasonable prevention procedures will protect against any such charge. Only the actions of an associated person in that capacity, as an employee for example, will expose an employer to a potential criminal charge. An associated person's employer is not held to account if they choose to facilitate third-party tax evasion in any other capacity. An associated person will know if they have facilitated third-party tax evasion. Facilitation cannot be committed unwittingly. Although an associated person has no control over a third party's tax affairs, they retain control over their own actions. In the event you are asked to facilitate third-party tax evasion in your capacity as an associated person, You must ensure you abide by the reasonable prevention procedures which have been implemented and, if necessary, speak to a suitable representative within the business. That brings us to the end of your training in respect of the corporate criminal offence. If you have any questions, please do raise them with your line manager.